How the mortgage stress test works. In this video I cover the mortgage minimum qualifying rate, MQR. What scenarios does the mortgage stress test apply? How lenders use income and debt analysis to assess whether you pass the stress test for a mortgage. Mortgage stress test effect on borrowing capacity. The mortgage minimum qualifying rate, MQR. The mortgage qualifying rate, MQR, in Canada's mortgage stress test is a key component used to determine whether a potential homebuyer can afford their mortgage under different financial conditions. The MQR is used as a benchmark rate to assess a borrower's ability to make mortgage payments. It's not the actual rate at which the borrower will pay their mortgage. Instead, it's a hypothetical, higher rate used to test the borrower's financial resilience against possible future interest rate increases. As of the latest guidelines, the MQR is the greater of either. The Bank of Canada's 5-year benchmark rate currently set at 5.25%, or the interest rate offered by the lender, plus a 2% buffer. What scenarios does the mortgage stress test apply? New mortgages. All new mortgage applicants must undergo the stress test. Mortgage renewals. If a borrower is renewing with the same lender, they will not be required to take the stress test. If a borrower switches lenders at renewal with an uninsured mortgage, they must take the stress test. If a borrower switches lenders at renewal with an insured mortgage, there is now an exception where the borrower is not required to take the stress test. Refinancing. Homeowners who wish to refinance their mortgage must pass the stress test, ensuring they can handle potential rate increases. How lenders use income and debt analysis to assess whether you pass the stress test for a mortgage. The test takes into account the borrower's income, debts, and potential future interest rate increases. Lenders utilize a set of criteria known as debt service ratios to determine if applicants can sustain the mortgage they're applying for. Gross debt service, GDS, ratio, which aggregates all housing costs such as mortgage payments, property taxes, and utilities, should not surpass 39% of your income. The total debt service, TDS, ratio, encompasses all forms of debt obligations like mortgage, vehicle loans, student loans, credit card debts, and child support payments, is expected to be below 44% of your income. While the rates used in the stress test are hypothetical, lenders assess your capability to adhere to these debt service ratios as though you would be contracting a mortgage at those elevated stress test rates. Mortgage stress test effect on borrowing capacity. The stress test often results in a reduction in the amount a borrower can qualify for, as it uses a higher interest rate for its calculations than the actual mortgage rate. The key purpose of the stress test is to ensure that borrowers are not overextending themselves and can maintain mortgage payments even if interest rates rise in the future.